Nice work if you can get it. Front page of the Sydney Morning Herald. Not just nice work, but beyond the work, not paying any tax on the work that you've done. Tim Colbatch, reporting for the Sydney Morning Herald, suggests that the 70 Australians, from tax office data, 70 Australians with incomes of more than $1 million each in the year 2010-11 who paid no tax. The report goes on to outline that the 70 of them earned $194 million between them. But by the time their accountants had finished, that had been cut to less than $20,000 in taxable income, or $1 of taxable income for every 9,999 that went untaxed. Andrew Conway is the Chief Executive of the Institute of Public Accountants, and he joins us now. Andrew, thanks for your time. Are you surprised to hear this report?
Look, good day, Adam. Look, it is surprising to hear those numbers, and it's alarming for the vast majority of us who were obviously stumping up to fill in the gaps of government revenue.
But it would be public accountants like people in your institute who've helped them get down to this level, wouldn't it be?
Well, look, it's an interesting discussion. I was having a discussion with somebody who's doing some work abroad on this issue the other day. It raises a question around what's legal and what's ethical. And we have a very strong position as an institute that just because a loophole, for example, exists in taxation law or a loss carryback provision exists, they exist for good reason for things like small business owners who have struggled in recent times to make ends meet. They don't exist, and they're not intended for successful entrepreneurs to exploit for taxation gain, and tax minimisation. I mean, they exist for legitimate reasons, as I said, to help those people like small business owners who have done it tough.
Okay, let's strip away the terminology. But so what happens if I earn $1 million, but I can reduce that income to below $20,000? We agree that if my income is reduced to $20,000, I don't pay tax. Yeah.
Effectively, yes. Yeah.
What are some of the ways that I can legally, ethically question mark, but legally, how do I reduce my $1 million? What are these people doing to reduce their income from $1 million to $20,000?
Well, I mean, there are a number of ways. There are tens of deductions that a person can apply through the taxation process, and as I said, they exist there for good reason. Whether it's self-education expenses, whether it's actually expenses to do with the management of the taxation affairs, and that's that was where you kicked off your questioning. Then there's into things like, as I mentioned, things like loss carryback provisions. Now, without getting too stuck in the techno speak, that basically means if you've been running a business, you might be self-employed, and you've actually you've suffered successive periods of loss. The government now allows you to bring those losses forward and to bring them back from previous years and apply them if you've made a profit in a certain period. So you can
so if I'm running a restaurant and it takes a few years to really get going, rather than just getting taxed on each individual year, I can add it all up over a few years and sort of take those losses away. I might have made some money this year, but the previous couple of years I lost money. I take those losses off the money I've effectively made this year, yeah? Yeah,
that's right. And then there are the other things that we all know about are things like charitable deductions. So you make a contribution to a charity over $2, they are tax deductible. But I note in Tim's piece that he talks about that only applies to 20 of the 70 that were in this batch of high income earners.
One more quick one that people hear about: negative gearing is also a way that people who earn large amounts of money might reduce their effective income. That's if you own an investment property you're losing money on?
Look, that's correct in a way. I mean, it's effectively you're able to offset in your taxation. You're able to offset any costs or any costs of maintaining that investment. So that's a very common way of reducing tax. But the important point, though, I mean, is that these provisions do not exist for people to exploit. They exist for the vast majority of people who are doing the right thing. It's just disappointing when you have a small number of people who are clearly, the term that's used both for companies and individuals is that they're aggressively planning their taxation, and that actually takes it does take important revenue away from the government, and therefore it just means fundamentally that there is less money in the pot for things like roads and schools and police and education that's what it's there to fund.
Those 70 are the ones who are going to gain most of the attention this morning. But if you look further into this article, there are over 2,000 taxpayers who have declared income of more than $100,000 and paid no tax. There's a total income of $652 million cut to effectively only $600,000 across these 2,000 people. So it's not just a few ultra-rich. These are people on, reasonable incomes who are still quite aggressively driving down their effective earnings.
Yeah, well, that's right. And look, it's a hard argument to sustain, but for many of those 2,300, there will be very, very strong and valid cases for the deductions. But importantly, the ATO has very sophisticated methods of tax audit and being able to do specific inquiries, and they have a very, very detailed and complex way of working through and identifying those people who might have made few deductions in previous years and then all of a sudden have made a large number of deductions to reduce their taxation. You could be expecting, I think, to receive the attention of the ATO and the knock on the door saying, we'll have a look at the books, thanks. I'm
talking with Andrew Conway. He's the Chief Executive of the Institute of Public Accountants. Alan is on the line. What are your thoughts on these figures, Alan?
Good morning, Adam. I'm pretty depressed thinking that people can avoid tax like that, but at least they're picking up something. The government's picking up the GST on everything they buy, almost everything they buy.
And so
even the accountants fees they have to pay a GST on.
So you're arguing they're effectively paying 10% tax on any of that $1 million plus that they spend?
Yeah, well, they're still avoiding tax. There's no arguing that, but I think it's a good argument to have a better goods and services tax.
Okay, thank you very much for your call, Alan. Is a better goods and services tax one way to alleviate this? Can we reduce the number of ways we take income that are susceptible to minimisation and aggressive planning, Andrew?
Yeah, look, I think consumption-based taxes are very efficient forms of taxation revenue raising for a government. And the GST, I think, despite the angst when it was introduced, I think has proven to be a very efficient tax. One of the things we've called for as an institute is a mature debate. It sucks some of the politics out of the debate around the base and the breadth of the GST. I mean, many have called for broadening of the base and increasing the rate. We don't think we're necessarily there yet. There's a big public discourse that needs to take place. But, it's a consumption-based tax. It's efficient. Should we be looking at broadening it? Yes. Our revenue needs as a country are going to increase in time, and therefore, whether it's income tax, whether it's GST, we really need to be looking at the way in which we're funding government liabilities and government expenditure well into the future.
But we know that it consistently is an arms race between legislators creating certain taxation regimes and so people structuring their affairs in a way that gets around them. Kerry Packer used his famous phrase of, well, I don't pay more than 1 cent more in tax than I meant to, and you're a mug if you do, to which a lot of people respond, with the greatest respect, Mr. Packer, we can't afford to employ world-class accountants and financial arrangers to restructure yourself so that you are paying tax at those rates. These people are all declaring an income of $1 million, right? Would it work if there was a system of, look, no matter what your losses, no matter what your deductions, if you earn $1 million, you're going to pay $150,000 tax, and we can move on from there? Could you implement a system of minimum taxation just based on your income, ignoring deductions, or would people find easy loopholes around that, Andrew?
Well, it's an interesting debate because, of course, at the moment in Australia we have well north of. If you're earning $1 million, your technical tax liability is far more than that. So there'll probably be quite a few people earning higher incomes that would be very happy with the 15% flat tax.
But I'm saying that's you've still got to show valid legal deductions to get down to that. But no matter how creative and no matter how aggressively you structure, there's just you're going to pay this much, and you can try and muck around after that.
Look, I think to be frank, Adam, it would be one of those cases of a regulatory fix or a sledgehammer to crack the nut issue here. I think what we've got to focus on is the effective administration of the tax laws that we have, and making sure through the ATO compliance channels that the people who are claiming these deductions are actually doing so validly, and that they're compliant with the law. And as I mentioned before, one of the things that we are very attuned to is this discussion, not just for individuals but also for companies that might well be operating in Australia and not paying tax. That is a significant area of focus across, particularly the OECD, saying how do we address this issue of companies aggressively planning their taxation to avoid paying tax in the company they're operating, and that therefore deprives that local government of much needed revenue. So I think, look, for us, one of the critical things is for Australians who do have, and we know that they have, the confidence and the trust in their accountant or the tax agent. That's a really important relationship to preserve. So yes, there have been a small number of people who appear to be minimising their tax, where we can only assume that it is legal. I'm sure the ATO will find out if it's not. But using a registered tax agent, using a qualified professional to assist in the taxation affairs is a fundamental thing that Australians should do and should be encouraged to do to ensure that they are compliant with the law and they've got the safety and security of a person who's also bound by professional and ethical standards in the case.
Quick question, Andrew, on a different topic. We hear talk about family trusts. Mm. When you start to look into the arrangements that some people who earn very large incomes have, do they have these arrangements where they've got 4 kids and all the kids are effectively being employed to do things and money are being parked away in the kids' names? A lot of people say that family trusts need to be looked at.
Look, there has been a lot of focus applied to family trusts and trusts in general, and those, for want of a better term, the loopholes that once existed in family trusts and the tax benefits of trusts have significantly been reduced and those gaps have been closed. So the great attraction to go into a trust to effectively avoid paying tax or to distribute income still is available when away for a small number of people and a small group of people, but really those benefits have really been stripped away, and the ATO has done a lot of work to try and close those gaps and loopholes. So
one loophole closes, another one opens. Lovely to speak with you, Andrew.
Pleasure. Thanks, Adam.